Hi guys, welcome back to my screen. So basically, I'm gonna be showing you guys how I got here, how I'm able to predict about 450 pips on Euro USD alone. I repeat, guys, 450 pips. So basically, what let's remove the drawings. Let's replicate it again. So once you open your chart, first thing you have to go to the weekly to see an overview of what the market has been doing. And if you go on a weekly, you'll see that currently the market is retracing. The market has been trending downwards. The market has been selling for a very long time, and since very long time. And you can see that recently the market started buying, and this buying is a push up. So let's see if the market has reached a point at which it should start retracing. That should be our first confluence to start shorting. So the big guys in big time frame are telling us that it's time to sell. It's time to start pushing market downwards. It's time to start looking for sell opportunities. Market came, tested 0.618, tried testing again, but refused. Came to 0.1, 0.5 Fibonacci. So we have seen that basically that this is where the market's direction is going. So secondly, we're going to be looking for what? We're going to be looking for key levels and support and resistance. So how do you identify key levels? For our previous videos, you notice that key levels are being drawn by just looking at the left. So when you look at the left, you're going to look for areas which market retested over and over again, and just some chart won't look messy. You can see that this is a key level. It tested here. It came to this area to test. Came to this area to test. Multiple rejections, multiple rejections, multiple rejections, multiple rejections. Came here to test. Multiple rejections. So you can see that this particular area of the market is a key level. Now, since we've identified our key level, let me use horizontal array so the chart won't look messy at the end of the day, because you just need to have a clean chart. You just need to have a clean chart. So now we have identified our point of support. Now we're also going to identify our point of resistance, our most previous resistance. I repeat, guys, when trading, there are plenty resistance and support in the market, but always try to identify the resistance and support that's the most recent to the current market action or current market price. So you can see that this high right here is the most recent high at which the market tested. So we're going to be going back to our daily. Now we have identified key levels. Um, Now we can see the market has been ranging on this level for a very long time since uh range came here. So the range started basically, the range started basically February 2023, or we could say December 2029. This zone has been ranging for a very long time. So basically, we should be anticipating to here eventually, then here. So now we've seen that this is what we should be anticipating for. The higher time frame has given us a bias. So now we are going to be working with that bias. So basically, we're going to draw a trend line to see if there's any retest. So first touch, second touch. So if there's going to be any break, the break has to break. If there's going to be any retest, it has to break off this trend line for it to change our bias. So we are going to go on the 4 hour time frame now to find sweet entries. And how do you find sweet entries? Now you've gotten your bias. All you just need to do is to draw a counter trend line. I think I didn't draw this trend line properly. Yes. So all you just need to do is to draw a counter trend line. Perfect. So once you've drawn your counter trend line, it basically tells you what the market wants to do or what the market has done so far. So our counter trend line is going to be coming from it's going to be something like this. This is our counter trend line, guys. So you can see that the market has broken our counter trend line. This is a counter trend line. The market has broken our counter trend line. We tested to the area of the counter trend line. Now it has broken the support holding the counter trend line, which is this. This is also a minor level. It has broken it. So there's two things. Market might want to react on this minor level, or market might want to react on a when our market is coming to test. So we're going to draw our Fibonacci again, but this time it's on a to finding we are finding our entry. So we could see that this zone, this high here. So there's 2 points whether the market will react. Market will react at this particular point, or market will react at this particular point. We only analyze. So for me to be on a safer side, I'll be taking my short positions on this side of the market when the market is here. And basically, if you've noticed, if you're following my videos for some time, you'll notice that I like to place my entries on, you know, I like to place my entries, I think, actually, on round numbers because market basically respects round numbers. So basically, this is going to be my entry, and I'm going to be risking 50 pips on this trade. Basically, you could see now why 50 pips because it's above this high, and technically above this high. I would have loved it to go higher, but depending on your choice of interest. But this is where my Fibonacci is going to be stopping for now, and basically, you could see why I said we should be anticipating for 400 pips because 400 you could see 500 pips here, but don't be greedy, guys. Don't be greedy. Don't be greedy. So I'm gonna be going for 450 pips. Let me edit this 550. And yeah, perfect. So this is basically how I got to, you know, how I got to anticipate for a 450 pip move. First confluence, Fibonacci on the higher time frame. Second confluence, trend line to find the buyers of the market, which is selling. Third confluence that the market broke. This trend line was drawn to find the buyers, so we've given us the buyers that this is a bearish market. The third confluence is the counter trend line we drew. The counter trend line we drew is our fourth confluence. So basically, you could see that the market is giving us four confluences, and the fifth confluence is that the market reacted towards the trend line and start pushing down, broke the trend line, market started reacting, and also broke the support that was holding it. So you could see that basically the adverse market, you know, it's basically selling. So anything that will make the buyers of this market change or make my buyers change is when I see a clear break. If market takes me out here and I see a clear break above here, I'll know that now the market wants to start buying. But for the meantime, the market is giving us we trade what we see. We don't imagine things right here. So basically, I'll what make me short this market is if I see a clear break off here. But basically, this is a minor level. This is a minor level, but basically I'm anticipating for the market to, come to this zone. Anywhere around here, I'll be looking to pull my trigger. But for the meantime, this is where I'm anticipating for this particular is safer here than entering here. So basically, guys, I hope you guys enjoyed this video. I hope you guys learned one or two things. Quick lesson. I hope you guys know how to draw your fib. I hope you guys now know. Try to look messy. Okay. Yeah, quick one. Yeah. So I hope you guys are able to draw your fib. I hope you guys learned how to, use counter trend lines, how to use support and resistance, how to use trend lines itself, and how to go on a higher time frame to determine the buyers of the market. Now we've gone on a higher time frame, we've seen what the market wants to do, and we could see that on a weekly candle, we could see basically what the market is doing. But basically, we should be anticipating for more. So once there is a clear break off here, I'll come again on a YouTube video, and we're going to be anticipating for more pip value count. This over almost 1,000 pips. Almost 1,000 pips, guys. So basically, we could see over 900 pips, almost 1,000 pips. So thank you, guys. I've stolen much of your time. I hope you're able to learn couple of things from this video. See you guys. Stay tuned. See you guys in our next video. Thank you. Stay blessed.